This is our Forex blog for August 13th, 2013, and I'm going to do a quick blog just to showcase how our software did today. One of the easiest ways of trading using our software is using our currency indexes, which is basically a synthetic chart that we create ourselves, and we analyze every euro pair and plot it as if it's a regular chart. And what it lets you see is all kinds of chart patterns. It lets you see, for example, when the market makes a higher high and then fails and is not able to go back up. This is kind of like a head and shoulders pattern. You can see when trend lines are broken. You can see when Fibonacci areas are hit. You can use trend channels when you see a nice strong trend like this and you plot it, a trend line off the lows and project it off the highs. You can see it 100% nailed the high of the day in the euro. And once you see a sustained trend like this, this is what oftentimes happens. And so when you know an area, or even sometimes it goes slightly beyond that, but usually within a half an hour to an hour it will reverse. It allows you to anticipate selling the euro versus whatever's strongest at the time. So as we scroll this back, we'll see what it looked like at the time. You can see the dollar was trending up, the pound was trending up. The pound is at the upper containment bands, and at those areas it's likely to reverse. Typically the lower containment bands, the market reverses up, or it goes sideways up, sideways up. You can see it hit it, bounced, hit it, bounced, hit it, went a little bit below that. Obviously it was a super weak trend, but when it gets below the lower containment band, eventually you're going to get a bounce, even when it's statistically this weak. So when the euro was likely to reverse, you can see the dollar was trending up. It had a lot of strength. The daily trend's up, the weekly trend shifted up, the monthly trend unfortunately is down. I don't use the monthly trend much at all myself, but at this point the dollar's above its hourly moving average in gray, and it had been trending up. It made a higher high than the last swing up, and it had a nice pullback for about an hour, hour and a half, hour and 15 minutes. It's likely, the euro dollar is likely to reverse down. So let's bring up a chart of the euro dollar. This is how you can use this to anticipate future trend direction with a very high degree of accuracy. Let's find the exact time here. It's a little bit after 5 a.m. And you can see right on the euro dollar chart, it barely made a higher high, double topped here. It had previously been trending down. You can see it made a lower low here, came back up, and at 5 o'clock you're looking for sells. Whether you got short right here or you waited, if you're a little bit more conservative, for this little sideways breakdown right here, you can see it went from 33.05 all the way down to 32.35. So absolutely huge move. If you shorted here, you might have got out of the trade here, shorted again, you made a small profit, shorted again here, and had an astronomical one. And that's how you can use our software to actually predict future price direction. And that's just one of many, probably dozens of ways to find reversals. You can, for example, once you see a trend that's down, draw your Fibonacci's on this move and look to sell the 50 to 62%. That's usually the sweet spot right here. Let me put a little circle around it. This is a pretty high probability place to sell. The only downside in selling this is the trend intensity is actually showing an uptrend at that time, but this is a pretty high probability place to get short. 930. So which is one of the currencies likely to go up at that time? You can see the dollar's gone statistically too far. It's above the upper containment band, likely to reverse. The pound has been trending up. It's pulled back a little bit. I would have liked to see the pound maybe, at the 15-minute moving average or the hourly right down here. That way you have one currency that's reset itself to the downside, another currency reset itself to the upside. That would be ideal. But coming up to 10, the euro pound is very likely to go down. And even if the pound falls while the euro falls, if the euro falls faster than the pound, the euro pound is still going to go down. So here's coming up to 10 o'clock, and you can see as let's just, we're looking at those charts, and we see that it's likely to break down. You wait for it to break those little swing low here before you get in. You might be short right here with your stop right above the high. Your risk is astronomically small, super, super small. And typically you're going to want to draw your fibs on moves like this and get out somewhere between the first and second fib target. So this one went through the second fib target during this 5-minute bar and went all the way down to the 2.0. In my experience, probably about 90% of the time, price does not go underneath the 2.0 level without some kind of pullback. So if you were watching this in real time, you might have got out of part of your trade here and then the rest of it here at the 2.0. And it's possible it might continue down, but typically you're going to get a little bit of a pullback up. As you can see, it's pulled back up and it's kind of going sideways here for an hour. So if you got out here and here, you could always be out of the market and getting back in again here during the pullback. You would want to draw your fibs on this last swing here. And you can see again it's a 50% pullback. But this is how you use software to find the strong and the weak currencies. And you can also do it in much easier ways without having to learn reversal signals. It's pretty clear to see the dollar's going up, the yen's going down, the pound's also going up. It's above its hourly moving average, rallying up, finds support to hourly, rallies up, finds support to hourly, buying the hourly. It's very high probability. And you can see the yen's extremely weak. You focus on pullbacks in the dollar yen to buy or pound yen, you're going to do very well. You can visually see which currency is strong or weak. Here you got this pullback right here, goes up. You have a nice little wedge pattern right here, it goes up. Another wedge pattern right here, it goes up. Decent pullback right here, goes up. Another decent pullback, it's kind of going up. Your stop's initially under here, you move your stop up, you move your stop up, and then it's kind of running out of steam up near the highs. Let's take a look at the pound yen. The pound was strong, the yen was weak. Again, you're looking to buy pullbacks or sideways breakouts. Here's a nice little sideways breakout, huge move. I prefer the pullbacks. Very small, probably 20 pip profit there. 2-hour breakout. This would have been a loss probably. You got in this trade right here. It shot up. You made anywhere from 25 to 50 pips on that one 5-minute bar, or if you waited, you made 25 pips. Another pullback right here, which you might have lost. You get back in, you make 25 pips. And that's really the key to trading. Don't worry about whether the trade works or not. You just have to trade the expectancy and at the areas where it's likely to reverse. You can use trend lines, double tops, double bottoms, Fibonacci areas. Don't buy or sell the 38% retracement. Your odds go dramatically up when you wait just a little bit longer, sometimes 15 to 30 minutes, and buy or sell the 50% Fibonacci retracement or the 62%. Typically 38% moves only work when the market makes an astronomically big move, like in the yen here. This is a very huge move. I would not expect it to make its way up to the 50% when it hits the 38%. If it does, it's likely to bounce, and it obviously hasn't done that. So these currency indexes can be used on multiple time frames. You have 5-minute chart here if you want to see an hourly chart of the yen, see what the longer term trend is. You can put that on there. You can see the yen was trending up. It had trouble getting back to the highs, broke a 2.5-day low right here, and that's what led to its sell-off today. Now, for those of you who don't want to learn how to trade, soon we're going to be releasing our new signals, which you can see are pretty accurate. They're not 100%, nothing is. This trade here worked, this one worked, this one failed, this one worked, this one pulled back a little bit. You might have made 2 or 3 pips or broke even. You made 10 pips on that. And then, of course, this one worked, this one worked, this one worked, and these failed. Typically, I don't trade myself after 11:30 or 12, but I do put the signals in there just so I can test them and try to tweak them during the dead times. You have to be a lot more cautious during the dead times than during the more active times. And you can also see on this chart here, whoops, let me draw the fibs on here. Big moves, oftentimes, you got to wait at the very minimum after it makes a big move for a 38% retracement. So here was a 38% retracement of the whole move down. This would have been a much safer sell than getting short underneath 38% retracement. So for traders who know how to trade, know how to use Fibonacci's trend lines, know all the chart patterns for both continuations and reversals, your odds are going to go up dramatically.